is way worse and more difficult for them to combat than the alternative.
Yeah, absolutely. And I think that's why risk assets remained as supportive as they have been over the course of the last couple of months, despite, whether it's medical virus volatility and or inflation volatility kind of making its way into the market.
Marvin, so much of the exercise right now, and I take this at a macro level, is all this news flow coming out of an original natural disaster into something original, a boom economy. We haven't seen this in 47, 48. What should our listeners and viewers do given a boom economy? How do they allocate given the macro flow of news?
Well, and I think rates and the Fed is the backdrop around that. So long as we've got these negative yields in a booming economy, it's really supportive for risk assets. It's really supportive for taking that equity risk, and I think that that becomes part of the asset allocation discussion. And then we start to parse things. This has been a market where we're looking for those that might benefit more than others.
Yeah, John from Coventry says go Matthew right now. Let's go Matthew, Marvin. When you see the real yield come up from a substantial negative level towards zero, as it did in Switzerland, as we're seeing German 10-year, is that a linear flow, or is John's using this phrase reaction function? Is that a linear or quadratic movement?
I think that the market should be able to handle 0% real yields. You shouldn't need a repressive financial system for companies to do well. There is a level within kind of that real yield discussion when it becomes much more positive than zero that you wind up with alternatives. And the risk reward amongst different asset classes come into play. But a zero real yield, which is at this point from a 10-year perspective, still 80 basis points away, shouldn't be enough to derail how companies are able to still perform well in an environment where you've got positive growth.
Marvin, do you think Europe can handle zero real yields?
Yeah, that's certainly a much different type of equation. Their demographics are different. Certainly, the amount of fiscal stimulus that they have is different. It's going to be harder, and I think that's the conundrum that the ECB has as they try to sound as dovish as they can, but ultimately, is moving along the same normalization path without as much of a growth response that we're seeing here.
Ultimately, though, Marvin, isn't that the tension, the issue here? That the US Treasury market can't trade in a vacuum, that it's the global bond market, and then you get a move towards zero real yields on a 10-year Treasury. Can you imagine what it looks like over in Europe?
It's the conundrum of the ECB. It's still a lot of different economies with a lot of different speeds, and you've got one organization trying to keep it all together with one number, whereas, certainly for us with the dollar and a more cohesive economy, it's much easier.
Good luck, June 10th, the next ECB meeting.
Yes, absolutely. The focus is going to be on what they do with PEP. It's going to be, everyone certainly is looking at the size of the balance sheets, and that being the first stage of normalization. The envelope structure itself leads itself to a natural tapering process unless we hear differently. So it's an important meeting in the middle of summer. Absolutely.
Marvin, good to catch up. As always, Marvin Lowe there of State Street, the global macro strategist. Your 10-year in Germany this morning, negative about 15, 16 basis points, coming out a basis point or so on a German 10-year, Tom, just coming in about a basis point this morning.
Yeah, I mean, they're coming in. And, John, I go again to everybody's talking higher yields. I'm looking to 4 digits, 1.5910 on the nominal 10-year. I think this show, John, we sort of expected this range and these attempts to come under 160. Most of the street's looking for 165.
Look, not my opinion. Matt Hornback of Morgan Stanley, I think, described where he was at recently pretty well in the last 24 hours, including on this show, Lisa, that he's starting to lean the other way. He's just starting to think about his bull case for treasuries and his bull case forecast for the treasury yield. And
one of the reasons behind this is how much there already has been that movement. I mean, you're talking about whether Germany can handle a no yield, a zero on the 10-year after having been negative for so long. Just to give you some perspective in some of the losses, the 100-year Austrian bond that was sold nearly a year ago has basically posted more than a 30% loss on a price-adjusted basis since then. I mean, just to give you a sense of how significant the move has been, John.
Coming up, Dr. Emma Shadalja, Johns Hopkins Center for Health Security Senior Scholar, will continue that conversation on the healthcare and the pandemic issues of our time. In your equity market, up about 10 on the S&P 500. We advance about 1/4
See how
1%.
she killed me on
Yields
that?
in a basis
How
point.
did I kill you on that?
I bought it.
10.
I bought it at par. I mean,
Oh,
it went
yeah?
to 140.
Triple leveraged?
You brought the 2117
Yeah.
century bond.
In
And
the
actually,
Swiss-
in the Swiss
actually
bank
TK,
account.
that had a great year last year.
It did.
Delivered
I
you
didn't
more
get
than
out at
40%.
140.
You had a fantastic 2020. It did exactly
Lisa
what it
just
said it would do.
Lisa just ruined my morning.
Oh, yeah? Well,
You
it's
enjoy your
transitory.
drink. You enjoy your drink. I'm sure it's not transitory. From New York with Tom Key,
bought
Lisa
that piece
Bravich,
for
Jonathan
Vedville.
Ferro. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. More than 1.6 billion COVID vaccine doses have been administered globally. That's according to data collected by Bloomberg News and Johns Hopkins University worldwide. The latest vaccination rate is an estimated 28.5 million doses per day. Dr. Anthony Fauci, the top infectious disease doctor in the U.S., has said roughly 70% to 85% of a country's population would need to be vaccinated in order for a return to normalcy. President Biden will meet privately at the White House today with the family of George Floyd 1 year after his murder. The meeting comes as negotiators working on policing legislation in Congress are still stuck on how to hold law enforcement officers accountable for excessive use of force. Biden had hoped legislation bearing Floyd's name would be passed by the anniversary of his death. EU leaders are vowing sanctions on Belarus and are imposing an effective flight blockade on the country. That's after the forced landing of a Ryanair jet and the arrest of a dissident journalist. The bloc is looking at Belarusian officials who should be added to a blacklist. National leaders are also looking at broader measures to target businesses and entire sectors of the Belarusian economy. And a powerful cyclone is set to slam into India on Wednesday, the second in less than 2 weeks. Officials are gearing up for relief operations at a time when the country is facing the world's worst outbreak of COVID-19. Forecasters say the cyclone is equivalent to a Category 3 hurricane and will bring heavy rains and winds of up to 115 miles per hour to some regions in eastern India. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Rishika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I don't think it's going to be really sustainable to be putting on and taking off lots of different travel restrictions, especially when the travel restrictions are so porous. I mean, often the travel restrictions don't apply to citizens of your own country, understandably, but then they certainly can get infected and bring the virus in. So I think that, vaccination, particularly with the evidence that the vaccination does work against variants, really has to be the bedrock of a control strategy.
The travel restrictions remain confusing. That was Joshua Sharfstein there, the Johns Hopkins Bloomberg School of Public Health Vice Dean. From New York, alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Here's your equity market this Tuesday morning. Good morning to you all. We're up about 1/3% on the S&P 500, through 4,200. On the NASDAQ, up about 58 points. We advance 0.4%. Into the bond market, yields in about a basis point, a break of 160 at 159.10. A euro that is a little bit stronger against the dollar, up 1/3% in the euro's favor, euro dollar 122.54. And crude just a little bit softer, lighter, lower, Tom, down about 1/3%, 65.85 on WTI.
On the pandemic, we speak to experts who've been very good about that. Some are new people recently, and also people that have returned day after day, week after week, including Amish Adalja with Johns Hopkins Center for Health Security and their senior scholar. Amish, John Ferro has been very good about the poker game of the different European countries. Let's triangulate as one example, the United Kingdom, Germany, and Spain. Are we naive in the United States that we're not triangulating New York, Kansas, and Idaho?
Well, I think the country's on different types of timescales when it comes to vaccination. But overall, I think that the country is looking better as a whole than many of the EU countries will do, where you've kind of got a hodgepodge of policies, a hodgepodge of vaccination rollout. So, for example, the UK is in a much better place than much of most mainland Europe, and I think you're going to see that distinction be present until a significant proportion of those populations are vaccinated, where you'll see different policies. And I think they also have different ways of thinking about the virus. And I think that I think the UK and the US in general have really been countries that have focused a lot on flattening the curve, preserving hospital capacity, and then sort of realizing that this is not a virus that's going to go away, where there are some European countries, as well as places like Australia and New Zealand, that have kind of a fantastical notion of COVID zero, which is not going to occur.
Dr. Adalja, the one common theme is to keep vaccinating people. In your head, what is the number of vaccinations per day for the U.S. to create momentum? Is it 500,000? Is it 800,000? Or do we need to sustain above 1 million units a day?
So I don't look at it in terms of doses per day. I did early on because that was more a function of how well our vaccine rollout was reaching the people that wanted to be vaccinated. And what we did is we used a prioritization scheme. Not everybody was the same priority to get the vaccine, and we gave a lot of those vaccines early on to high-risk individuals, nursing home residents, high-risk community dwelling people, in order to flatten the curve, in order to preserve hospital capacity. And that group of the population is very heavily vaccinated. If you look at people above the age of 65, it's about 3/4 of them are fully vaccinated. So that removed the ability of the virus to cause serious disease, hospitalization, and death. So now what we're dealing with kind of is what I would say a mop-up, trying to get community transmission down, but we're out of a position where this is a public health emergency in terms of threatening hospitals again. So I think as long as we continue to vaccinate as much as possible, that's great. But I think we've already achieved the first goal of the vaccine, which was to tame this virus.
Doctor, as you just said, this is no longer a public health emergency. Any reason to believe it could become one in the future?
In the United States, I think it would be very difficult to see this virus be able to spiral out of control and threaten hospitals again, because the virus doesn't treat people equally, and we have vaccinated really aggressively in those groups of people that constituted the majority of people who were being hospitalized. So to me, I think we've removed that ability from the virus. We've made it much more like other respiratory viruses that we deal with year in and year out. The more we get vaccine into people, the better it's going to be. But I think we really all can breathe a sigh of relief because our high-risk populations are protected.
If the variant that was first identified in India became the dominant strain here in the United States, Doctor, would you be able to say the same thing with confidence?
I do think that when you look at the vaccines, especially the mRNA vaccines, they seem effective when it comes to this Indian variant. So I think the solution to the Indian variant, the way to make your country resilient to the Indian variant, is to get as much vaccine into people's arms as possible. So I don't think any of these variants can pose that problem to the U.S. because of our vaccination strategy. If you're a country that hasn't been heavily vaccinated, these variants can be disastrous. But if you've gotten vaccine into the arms of the most vulnerable, then those variants are going to have a very difficult time putting people into the hospital. They may be able to infect, they may be able to move through your community, but they're not going to crush a hospital.
Dr. Adalja, it seems like there is a disagreement emerging within the public health community about whether this is a public health emergency still, or whether we've emerged in a post-pandemic era. What are the scientific underpinnings of that disagreement? In other words, is there some threshold that people are looking at where the cases will go down dramatically and that people disagree on that?
It's hard because each person kind of looks at this pandemic differently. And I've always said that I look at it from a hospital capacity angle, but other people look at it at a case level. And I think that's the wrong way to look at it, because this virus isn't something that can be eliminated or eradicated. Our goal was to be able to tame it and defang it. And if you look at the number of cases, I think there were about 25,000 cases yesterday. We're getting to the point where we're on the average of getting closer to seasonal flu or a bad seasonal flu. So to me, I think that kind of dampens the public health emergency. We've got enough vaccine into vulnerable populations. We have vaccine that's plentiful. We're still trying to reach more people. We're not worried about personal protective equipment supplies, ventilators, ICU beds anymore. We've got a pediatric indication. So I think all of that has kind of changed the way we have to think about this virus. And now we have to ask ourselves, would we do this for a bad flu season? And if we wouldn't do it for there, I think that's kind of how we would gauge where we are now in the U.S. with COVID-19. Of course, it's a very different story just outside the country, even in northern, just north of ourselves in Canada. But it's still something that I think we have to really recalibrate and change people's risk perception about this virus, because we've done such a good job at getting vaccine into people who really needed it.
As you allude to, that comes down to messaging, Doctor, and I think we've got to make a bigger effort on that front. And on the messaging, what kind of messaging do you take away from the travel restrictions right now? Can you make sense of them, Doctor, from a public health policy perspective?
I've never been able to make sense of travel restrictions for any infectious disease because they don't work. They're red meat for politicians because there's kind of this face value validity to them to the general public, but they never work. They give people a false sense of security. They have all these kind of weird premises baked into them that your own citizens don't have that disease, or that the disease isn't already in your borders already. All of that, it really makes no sense. I think travel screening and the fact that we've got vaccines, the fact that we've got rapid tests, that should be what we're doing rather than travel restrictions. I don't think they work, and I think they end up backfiring, and then it creates kind of a cascade of travel restrictions from other countries that are doing it, and they're not sustainable and really aren't supported by the science of what's going on with a highly contagious respiratory virus that's spread all over the world and has a very large spectrum of symptoms, so you don't even know where things are.
Doctor, we've got to leave it there. Dr. Amish Adalja of Johns Hopkins Center for House Security Senior Scholar. Tom, you know the science is proven. COVID knows if you're a citizen or not.
They do. They do.
Of course it does.
They do. And they understand if you're in economy or business class.
Yeah, and whether if you're standing up to go to the restroom or if you're sitting down in the restaurant.
Yes.
I'm pleased we sorted that one out, didn't we? Eventually. Unreal.
Lord.
Coming up, Anahan of Wells Fargo on its equity market, up 11 on the S&P. We advanced on the NASDAQ as well by 0.4%. This
Matt Hornback was on?
is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
I feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Had a bit of a melt up in the first half of the year, so we don't necessarily see another melt up happening.
Inflation could keep rising, it's already rising, but stay higher for longer.
It's really about the supply side of the economy that we don't have very much information at the moment.
The idea here is that the Fed is going to be behind the curve when they do start the tightening process.
I don't think those rates are going anywhere. I think the Fed has been very clear that they're not going to allow any part of the curve to really get away from them.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures with a lift up 11 on the S&P. We advance about 1/4% on the NASDAQ 100, up 1/3% after a tidy rally in yesterday's session. Tom, for now, big tech making a bit of a comeback about.
Yeah, we haven't talked about it yet. Let's do that right now. Big tech coming back after being the darling, 8 months ago, 9 months ago, 10 months ago. And some of the charts just show how unloved those big fangs are, John. I was really unaware of that. They've been out of favor.
Well, if Morgan Stanley's James Gorman has his call materialized, Tom, then maybe things change again. A higher rate in early 22 over at the Federal Reserve. The call from Morgan Stanley's James Gorman at a conference in Japan this morning.
We've got a guest coming up that'll really dive into this. But, John, this growthiness, valueness of what the Fed does it's almost like gospel right now. I'm not so sure it's gospel.
You push it back, Tom?
No, I just think the certitude of if we get deflation, Apple goes up. If we get inflation, Apple tanks. I have trouble with that certitude.
You tell me where the rates market goes, Lisa, and I'll tell you where the equity market goes and the complexion of it. What do you make of that?
Well, that is what the presiding sentiment has been. I mean, it's not a coincidence that you've seen a rally in the NASDAQ and disproportionate gains in tech shares as the yield has come down, as you've seen longer-term inflation expectations come down. Look, on the Gorman point, on the idea that the bank executives are saying, yeah, we expect higher rates in the future, how much is this talking their book to? I mean, that will be absolutely beneficial for them, and they would like to see an environment on all counts where that happens.
You think the bankers want higher rates, Lisa? Do you?
Do you think the sky occasionally is blue? Good morning.
Sometimes.
Sometimes, that's fair.
This is a Thursday conversation.
A Thursday conversation on a Tuesday. Equities up 10 on the S&P. Here's your price action this Tuesday. Just to whip through things quickly. In the bond market, yields are lower by a little more than a basis point to 158.93. The euro is stronger. Euro dollar 122.49. That currency pair bottoming out when the 10-year yield in America topped out at the end of March. We're back to 122.50, let's call it, up about 1/3 of 1%, Lisa.
Yeah, just on the euro point, one thing that I look at every day when I take a look at the euro-US cross is the euro-Chinese yuan cross, because that seems to be also really important with respect to the ECB and how concerned they are based on the trading relationship there. As far as the data that I'm looking at today, 10 a.m. we get U.S. April new home sales. Expect them to decline as prices increase. I can't get the statistic out of my head. A 19% year-over-year increase in the median cost of a home in the United States. That is the biggest increase on record, even exceeding the housing boom leading up to the 2008 crisis. Also, we get May consumer confidence. Look for inflation expectations. 10 a.m. also, we hear from Fed Vice Chair Randy Quarles. He'll be speaking before the Senate Banking Committee. Again, I want to hear about froth. How concerned is the Fed to this? How much does that affect, John, to your point, their reaction function? How quickly they will move to try to offset some of the ebullience that other central banks seem to identify in the United States. And then at 1 p.m., Tom's all over it, the auctions begin. The 2-year notes being sold, more than $60 billion of them. Not a lot of action on the 2-year front. Nonetheless, interesting to see whether anyone agrees with Mark Gorman that there could be, James Gorman, excuse me, that there could potentially be a rate hike as early next year.
You think of Mark Gurman there, the Apple reporter.
That links in Apple with deflation.
Really interesting story.
You call me out on that one.
Really interesting story from the team.
Yeah.
On Square.
Yeah.
Yesterday. What did you guys make of that,
Well,
Lisa?
this,
JP
to
Morgan,
me,
bit of competition coming from Square, maybe.
Honestly, when you hear the bank executives talk about their future, they talk increasingly about competition, and it's not competition from one another, it's from big tech. And increasingly, that is what they are looking at, especially as we start to talk about the digitization of currencies.
John, I would look at it as a flow of funds. I'm less worried about the technology and all that, and I would look at it much more like within charge cards, credit card, think Chase, commercial banking, Marianne Lake, and the turmoil there. It's about the flow in and the flow outs of money with this new technology.
A report from the team yesterday that Square could be offering additional banking services to some of its customers. One to watch. Another one to watch, Tom, just quickly. Amazon, close to that deal with MGM Holdings, reportedly. We could hear about that as soon as this morning, as soon as today.
I read on this carefully, and what's interesting, John, is it does not include the old catalog. The MGM we know, Roaring Lion,
really?
black and white movies. Warner Brothers owns that from another transaction ages ago. For example, I believe, don't quote me on this, Gone with the Wind is not owned by MGM, even though the Lion is there at the beginning, because I'm watching Gone with the Wind like every 3 weeks.
One of our 10 listeners this morning might quote you on that, Tom. So do you want to go away and find out if that's actually true?
The Lion is there.
Or not?
Look, the Lion comes on in the movies, and Vet Bill and Kennel Fee go absolutely mental.
Is that what
That's
happens?
what I know.
Anna Han joins us now, Wells Fargo
John.
Securities Equity Strategist. Like most guests at around 7:05, wondering what on earth is going on in this program. Anna, great to catch up. Let's talk about this growth bounce. What are you looking at that tells you this one doesn't last?
I think that question cut out a little bit at the end there, but you're asking me, if this right now, this growth bounce doesn't last. If that was the question, I would say, I think what you got right now is a pause in the rise in yields. And that pause or that slowdown in the pace is kind of giving that breather to this style. But, over the next several quarters, several months even, you look down the road, this reflation trade is going to continue. And even if we get some decent CPI prints for the next several months and the rest of this year, I don't think that's going to be enough to necessarily, force the Fed's hand into tightening any time before 2024.
And the only reason we have you on is you go right to XY axis and Cartesian geometry here, and you're comparing and contrasting the two outcomes that we have. I would submit that it's not about a parabola, x squared, y squared, whatever, an exponential function, and it's not about a hump and being transitory. It's about the in-betweenness there. How do you frame the geometry between those two outcomes? That went over. Am I still or is she still? I think that was. We've got some audio. See, John, I just tried to go Cartesian there for Anna Han, the physicist from Yale, because I love her research notes on this.
Something just came back to me. And for what it's worth, we have some technical difficulties with Anna Han of Wells Fargo.
We do.
She does have a maths degree from Yale, so she understood everything you said, I think.
If she had heard
the last couple of minutes. Tom, there's a great clip of you that the team in radio showed me years and years ago.
Oh, no.
And it's you asking a very complex long-winded question of a Federal Reserve official.
And they went silent.
It went silent.
Yeah.
And said Fed official turns around to TK and just goes, I have no idea what you're talking about.
But they did. The problem is they actually did. But the thing is, Anahan is right about this. Guys, Anahan writes one of the smartest notes on Wall Street. And John, it's about the dynamics. And what I'm suggesting, and you guys can remember this, X, Y, a single piece of paper. We all flunked geometry. There's that complexity.
Speak for yourself.
Or John, how about the 3D space? I mean, if you bring other dimensions into this, like GDP, like pandemic recovery, like the dynamic of geography, then you get into huge complexities, and that pushes me away from the certitude of reflation, worry about the 1960s, or transitory, which is the theme of the moment.
The bigger challenge, I think, maybe at the end of the year, Tom. Yeah, fantastic.
Thank you. Okay.
The bigger challenge, I think, at the end of the year is probably not so much the inflation debate, it's the deceleration conversation for growth. And the reason I say that is because we talk about the former far more than the latter, Lisa, which makes me wonder whether the latter is somewhat more underappreciated.
Especially because stocks have been an inflation hedge, right? Increasingly, people have looked at stocks as an alternative to bonds even because they potentially could benefit from an accelerating cycle. What happens if Matt Hornback is right? What happens if bond yields fall, if the Fed does hold on, and you start to get this fear that the economy is going back to the paradigm that we were in before, low growth, low inflation?
To be fair to Matt, though, I think we're only 10 basis points away from the bull case right now at 158.93 on 10s. The real call, the real big bullish call, I think, is Mr. Steve Major over at HSBC, who I believe, Tom, is still looking for a move back towards 1% by year end.
Yeah, I'm glad you bring this up. There is still a case out there, folks, within all the gloom that's out there and the pendulum of higher yields, of wise people, they may be right, they may be wrong, are saying, wait a minute, the certitude is going to kill you. You mentioned Mr. Major writing in Asia for HSBC, and I would also mention David Rosenberg. They're just saying, calm down, and this is a varied set of outcomes. It's not just one reaction function, John, and we don't know what that path is going to be.
What it will come down to is inflation expectations, and if you'll afford me the time, this came from Governor Brainerd yesterday. A very important part of inflation dynamics is longer-term inflation expectations, and those have been extremely well anchored, implying that if we saw some development pushing inflation up, I wouldn't expect that to get embedded in the ongoing inflation rate.
I believe we've got Anahan back with us for a short visit here now with the technical difficulties. And I want to go to the geometry here. What's between the certitude of transitory inflation and the idea of a fear of inflation back to the 1960s?
Well, 1960s wouldn't be my strong suit, but, I'll give it a stab. When you think about how the inflation picture looks right now, this transitory is this key word we've all been hanging on to. But how do we define it? How do we framework it? When you think about past recoveries, how much inflation do we have to see to actually see the Fed, take accommodation off the table? For us, even if we see change in CPI throughout this year, a notch above 3.5 to low 4s, and even in 2022, if we were to see, we expect probably a mid 2 to low 3% range next year. That still doesn't put a Fed rate hike sooner than 2024. If anything, we have $120 billion of Fed purchases going through a day. Having a little bit of that trimmed back is going to be the first step. But right now, we haven't even really considered those tapering. You hear whispers of it, but that's not really where we're at. So to see that persistent level of inflation is going to have to be higher than this sort of 3%. Through more than several quarters for us to really feel that we're at risk of accommodation meaningfully coming off the table.
And I appreciate the additional comment, and my apologies about the technical connection. Anahan there, Wells Fargo Securities equity strategist. Send our best to Mr. Harvey over at Wells Fargo, won't you? You brought a market this Tuesday morning up 13 on the S&P. We advance about 1/3 of 1%. Coming up in the next hour, David Costin at Goldman Sachs, the chief U.S. equity strategist. Looking forward to that with Tom Keene, Lisa Abramowitz. I'm Jonathan Ferro. This is Bloomberg Surveillance Live on TV and radio.
With the First Word News, I'm Rishika Gupta. Secretary of State Antony Blinken kicked off a Middle East diplomatic mission today with a pledge to help reconstruction efforts in Gaza. Speaking in Jerusalem alongside Israeli Prime Minister Benjamin Netanyahu, Blinken said he will specify an aid package to Palestinians. He vowed the U.S. will ensure the militant Islamic terror group Hamas won't benefit from the rebuilding efforts. Blinken also reiterated the U.S. commitment to Israel's right to defend itself. The entire world has been battling the same virus for over a year, but the quality of life and control of the pathogen spread looks vastly different depending on where you are. There's a shakeup at the top of Bloomberg's COVID resilience ranking, with last month's #1, Singapore, falling in May along with other Asian economies. In contrast, the US and parts of Europe have been steadily climbing up the ranking as the pandemic slowly recedes and vaccination numbers climb. The UK jumped 7 spots to 11th, and the US is number 13. New Zealand took the top spot. Turkey's president is shaking things up at the country's central bank once again. Recep Erdogan has appointed economist Semih Tuman as a new deputy governor, whilst Erdogan's previous sudden decisions to swap out senior positions at the central bank jolted markets. This time the lira held steady against the dollar. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
there's a lot of hard work ahead to restore hope, respect, and some trust across communities. But we've seen the alternative, and I think that should cause all of us to redouble our efforts to preserve the peace and improve the lives of Israelis and Palestinians alike.
That was Antony Blinken there, the Secretary of State for the United States from New York City. This is Bloomberg alongside Tom Keene, Lisa Bravitz. I'm Jonathan Ferro. Good morning to you all. Tuesday morning, equities up 13, advancing 1/3 of 1%. Some outperformance from big tech recently. Your Nasdaq up 65. The Nasdaq 100 advancing 0.5 of 1%. Outside of that, into the bond market, yields a break of 160 to the downside. South of 160 at 158.93, down a little more than a basis point. And in foreign exchange, euro showing some strength. Dollar just displaying a little bit of weakness. Euro dollar 122.53. Tom, up about 1/3 of 1% on that currency pair.
Yeah, euro is something, again, folks, if we see it up to a 123 and breaking higher, that's a big deal. We'll see if we get there on a more interesting Tuesday than what we saw yesterday. Right now, and as we've looked at Belarus and some of the other political issues, we need to center back to Gaza, Israel, and Palestine. Jack Fitzpatrick joins us, our Bloomberg government reporter. Jack, what I notice here, and we've seen it before, certainly back to 1967, if not back through before, is how quickly it falls off the American radar. The front of the Washington Post, the front of the New York Times, really no stories today on Israel, on Gaza, on Palestine. What will keep this fermenting in Washington, or will it drift away?
Well, keep in mind the Biden administration has not necessarily sought to put itself front and center in everything that is happening in Israel and Palestine. Clearly, the Blinken trip will do that. It's going to be in the news cycle as he meets with Israeli and Palestinian leaders, among others. But keep in mind, he's also, I think, notably going to meet with El Sisi of Egypt and the Jordanian foreign minister, because other countries in the region kind of have to take the lead, probably more than the U.S., on going back and forth between the two sides in this to make sure the ceasefire sticks. So the goal for the Biden administration appears to have not let the Middle East become the absolute top priority, but still being involved to some degree.
And Jack, I can do this because I know you're so well read in. Let's move up the Levant to Turkey. Establish the Biden relationship with Turkey right now versus what we saw with President Trump.
You know, that's another one that they haven't exactly put front and center, but the Biden administration has talked about pushing back on more authoritarian regimes. I'm not exactly sure necessarily how to tie Turkey directly into this. That's not part of the Blinken meetings this week. But you saw, during a Turkish visit during the early Trump administration, a clash in Washington with protesters that was largely overlooked by the U.S. That's a difficult thing to negotiate for the Biden administration, at least to say the least for now.
Jack, you talked about how the U.S. might not necessarily want to inject itself front and center in a lot of these disputes. It raises a question of whether the U.S. can do that while reprising the former role of being sort of the gatekeeper for global affairs, for being the leader when it comes to wrangling up some of the allies. Is this something that is a concern to people? In other words, how to take a more national focused view, similar to what President Trump had, while also reprising this role?
Well, they can do both. And in fact, Trump supporters would argue that the U.S. standing by Israel with absolutely no exceptions would be their preferred means of injecting the U.S. Into foreign affairs. The question and the thing that makes this difficult for the Biden administration is, if there is a flare-up, then how does it play in domestic politics in the U.S.? Because there is a significant amount of pressure from the Democratic Party to find some way to push back on Israel after all the violence that occurred there. How would they do that in a subtle way without going overboard and pushing too hard against an ally. But I would not necessarily draw a distinction between what the Biden administration is doing to try to engage with the world and what the Trump administration did in terms of a wholehearted allyship with Israel, because that is still sort of the center of where the U.S. stands in this. They obviously don't have a relationship with Hamas, which is why Egypt plays a role here. So this isn't necessarily an either or. It's a how do the Biden administration officials handle the political delicacy of the issue and be involved without pushing too hard if they need to have hard conversations with an ally.
Jack, just to wrap up here, I want to just focus domestically on the counterproposal that Republicans are putting together to Joe Biden's reduced $1.7 trillion infrastructure spending plan. When are we expecting that counterproposal, and why is it important to watch that?
Well, we got the White House's $1.7 trillion counterproposal on Friday. We got a lot of negative feedback immediately from Republicans. But as of late yesterday, Republicans seemed to think this was still going on. And the White House was saying they expect another counterproposal at some point from Republicans. The negative feedback was enough so that it's unclear how quickly this is going to move forward. But there does seem to be some agreement, at least from Roger Wicker of Mississippi, who says if they could agree to something around $1 trillion, that could be reasonable for both sides. So this is moving, despite the negative feedback after the White House proposal. It's just moving kind of slowly right now.
Jack, just quickly, are these negotiations sincere? And what I mean by that, do you sense that they actually want to make a deal, or are we just going through this process to engineer, find some fuel to have the blame game in about a year from now?
I think the Biden administration has to at least try, which may or may not be sincere, because they're more or less being forced into this by Joe Manchin and maybe other moderate Democrats. It may be a moot point right now whether it's sincere, because if they have to keep talking and they have to continue to seem like they're working in a bipartisan way, they could more or less get dragged into a bipartisan agreement. But I cannot guarantee that this goes on forever if there's still so much middle ground between Democrats talking about a $1.7 trillion plan and Republicans talking about something closer to $800 billion. There's a lot of room in the middle, but if talks continue, then good things could happen. So it's sincere enough for it to continue.
And talks continue. Jack Fitzpatrick, Bloomberg government reporter down in D.C. What do you make of that, TK? What's this about? Do you think it's sincere?
I think the issue I would take, John, and it's not, you may be right that it's about a year out where this becomes a completely political discussion. I would suggest that's going to happen sooner rather than a year out.
Tom Keene, Elisa Abramovich, Jonathan Ferro coming up. Shahab Jalanous of Credit Suisse, the chief FX and rate strategist, with your dollar breaking down a little bit, your euro dollar breaking out. Euro dollar 122.51, up about 1/3%. The equity market up 14 on the S&P 500. We're looking good on equities for the week so far, Monday into Tuesday, up 1/3 of 1%. Heard on radio, seen on TV. This is Bloomberg Surveillance.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Expect clear, concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works. For Brutus.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
2 hours away from the opening bell in New York City this morning. Good morning. Approaching 3-week highs on the S&P 500. The Nasdaq, we advance a third of 1% on the S&P, about 0.5% on the Nasdaq 100. Big tech with a bounce as yields start to settle down. Switch up the board and get to the Treasury market. A break of 160 on 10s this morning. Yields lower by about a basis point at 158.93. It is a snooze on a 2-year. That's exactly what the Fed wants to see. Your 2-year yield, about 15 basis points. A chart of the 2-year yield, no heartbeat for the last 12 months. We talked about that a little bit earlier this morning. Lisa guiding you through the supply this week. 2s later this afternoon, 5s tomorrow, 7s on Thursday. The test for me is going to show up in a 2-year yield. If you believe the Federal Reserve is wrong about their forecast, if you believe they're going to have to move sooner than anticipated because of that, that's got to show up in a higher 2-year yield. And right now, pinned to the floor. Mohammed Al-Arian raising a point out on Twitter this morning. Is it really about believing the data's going one way or another, or just the fact the Federal Reserve's still in this market, but at a massive rate every single month? It's hard to get a clean read on a Treasury market when you have a price-insensitive buyer buying up a lot of that debt. Switch up the board and finish on this. Talking of price-insensitive buyers and a bond market where you struggle to get a clean read, let's get to the bond market. Negative 16 basis points on 10s. We were gradually making a shift towards zero, seemingly at one point over the last week. We stalled out at about negative 10 basis points. This morning we come in another 2 basis points or so. But TK, the challenge is starting to build, I think, much more so for the ECB on June 10th. The euro's starting to advance. Italian 10-year yields are starting to break out, and we need some guidance. And they don't have the luxury of repeating what Fed officials did in Q1, which is it's consistent with a brighter outlook. They're going to have to carry on talking about the risk to that outlook.
Well, the brighter outlook's there. The difference is it's May and not January. We'll get to that in a moment with a wonderful guest, perfect for a year on the edge of 123. Right now, and so many of you are waiting, hanging, watching every tick of when Mr. Bezos and Amazon will buy Metro Goldwyn Mayer. David Wilson has seen every MGM movie. He's Bloomberg stocks editor. You've seen Die Another Day, what, 10 times?
Oh, I don't know. I lost track.
Rocky, it was 10 times. What do we got? When do we get Amazon MGM? Sometime today?
Well, it's entirely possible we get that. And in the meantime, we sort of look around for stories that are, affecting the market. AutoZone was out with fiscal third quarter results, and it really sort of continues a trend that we've seen as quarterly figures have been released. Eye-popping numbers relative to estimates, not much reaction in the stock. Earnings well above analyst average projection in Bloomberg survey. Those same-store sales, for sales at stores open more than a year, up 29%. That was almost double the average estimate, and it gets you 0.1% gain in the stock.
And you told me to buy that at 50, and it's now at 1,400. That really worked out. I didn't buy it.
Well, that's how it goes, Tom.
Come on, it's pretty much a linear moonshot, isn't it?
it sure looks that way over time. A real success story for Eddie Lampert before the issues he had with Sears Holdings. But I digress. Let's talk about Luminar Technologies. This is a company that makes laser sensors that are used in self-driving cars. People familiar with the matter say the company has a contract with Tesla for testing and development of those autonomous vehicles. Now, what's interesting, CEO Elon Musk over at Tesla, he said, we don't need the technology that Luminar provides to be able to build our self-driving cars. Nonetheless, they're at least testing it out. So Luminar shares higher in early trading. And we've got to talk about Lordstown Motors. The shares are really taking a beating after results were out late yesterday. The electric truck developer raised its projection of this year's operating costs, cut its production forecast, said it's going to have to raise more money. They expect to end the year with no more than $75 million in cash and equivalents. You go back to March, they were looking for $200 million. So definitely taking a turn for the worse at Lordstown.
That's it?
That's it.
That's it. Lordstown Motors, thank you so much. Do you have a SPAC for us?
Not today. It really seems like the SPAC market's kind of cooled at this point.
Do you have a why for that? I mean, is it just they haven't worked out? I mean, in 30 seconds here.
Lordstown, by the way, is an example of a company that went public through a SPAC.
I knew that.
And so that's one reason. Another reason, you've just seen this flood of new blank check companies. So it's a matter of what are you going to buy?
David Wilson, thank you so much. Greatly appreciate it this morning. Right now in Euro, this is perfectly timed. Shahab Jalanus is at Credit Suisse. He makes a cottage industry of cross rates. Shahab, let's go to the major rate now, euro dollar as well. Where is the tip point where European authorities, not just the ECB, worry about too strong a euro? Is it 125 or could it be higher?
It could still be higher. If you go back in time and look at the period between 2009 and 2015, a period that actually included a major European crisis, if you remember, around Greece and other issues, euro-dollar averaged over 130 in that period of time. It basically took Draghi and QE to change that psychology, and since middle of 2015, we've averaged around 114. So this level we're at now, around 122.50, is high by recent standards, but certainly well below the averages that we saw before 2015. So there is still room to the upside when you look at it from that longer-term perspective.
Shahab, the guide that we've had from the ECB, the Executive Board and the Governing Council has been to preserve loose financial conditions. The Italian 10-year yield is back inside of 1% this morning at 97 basis points. It was north of 1.1% in the last week. Do you think this move off the lows of February, when we were south of 50 basis points, Shahab, do you think this move is making them uncomfortable?
I think in isolation, no, simply because this move can also be attributed to improved reflation prospects across the euro area. And even those southern European countries, which were severely damaged, for example, by the loss of tourism income, their framework is looking much better. In fact, Credit Suisse economists have put out a piece looking specifically at the likelihood of tourism recovering across Europe. So that is something to bear in mind here, that can be looked at in a positive light. The other thing is, if you look at market-based inflation expectations, for example, five-year inflation expectations, they're still going up for the euro area as well. So that, to some extent, reflects global factors like rising oil prices. But again, from an ECB perspective, as long as that is still trending up, and we're back to levels that we last saw around 2018 for that indicator, there's probably some degree of comfort that still holds for the ECB at these levels.
So, Shahab, without the framework that the Federal Reserve can lean on, their new reaction function, the ECB does not have that. Does that make it difficult to push back against a stronger euro?
It certainly limits their potential to do so. Having said that, there is going to be a strategic review of the ECB's targets and policies, which is due at some point in the autumn. And there is some thoughts out there that this strategic review could result in a more dynamic approach, for example, to meeting price stability targets than what we've seen before. Now, would that be as flexible as what the Fed has created for itself? That's an open question. But any move in that direction would still be something that would obviously be very important for the markets and would allow for rates to be kept lower for longer, even in the case of Europe. Again, the Fed has maybe pushed the system to its limits at this point, and maybe the ECB wouldn't be able to do quite as much as the Fed. But again, it's just something to put on the calendar for sure.
Shahab, something that's gone under the radar, although is increasingly coming to the fore, is this idea of digital currencies, in particular issued by central banks. And I go to this because we've heard about that from the PBOC, and now we're hearing increasingly about that from the Federal Reserve. And bear with me for bringing this up, but I'm wondering how much you care about this, how much you care that the Fed is going to release this document later this summer about the digital dollar and its potential disruption to the financial system.
I think it's important, obviously, because any technological change that could affect the way business is done needs to be taken seriously. Certainly the cryptocurrency space is a hot space, not just for speculators, but there are people who feel that there really will be longer-term implications for the whole financial sector coming out of that space. So this is a reaction to competitive pressure, you could argue, from the private sector of the global currency space. And to that extent, the fact that there's a response coming from central banks is positive. Now, they could even find ways of adapting their policies around digital currency. Maybe there could be better ways of meeting some of their targets down the line if they embrace the technological change. So I personally think it's a good thing that they are taking this head on.
I mean, the reason why I bring this up is because it seems like volatility in currencies has been coming down, including the major ones. And I'm wondering what would have to happen to ignite those types of price swings, and what kind of exogenous shocks could you expect?
I think the most obvious way to create volatility in currency markets right now would be data surprises that extend even beyond the ones we've already had, to a point that effectively the messaging coming out of, for example, the Federal Reserve becomes completely untenable. And that's not impossible to see. If we were to see consistently high inflation numbers, for example, as we go into the summer, where the idea that basically this is all a transitory phase and that down the line we move back to a low inflation environment naturally. If that idea becomes materially challenged, we should see volatility not just in foreign currency, I would say in all asset classes that could be quite spectacular at that point in time. So I really wouldn't look at what's going on right now and project forward and just assume that it will be like this forever. I think the possibility is actually there for fairly high volatility in FX markets as we go towards the end of the year.
Recency bias, Shahab. You know how it works. You take the price action of the last week, you extrapolate it out 12 months. Shahab Jalanous, Credit Suisse, Chief FX and Rate Strategist. Feels that way as a journalist, I've got to say, sometimes, Lisa. You're always taking a price action at the moment and saying, is this going to continue?
Well, I mean, look, in fairness, when you have a very calm market, you're looking for what's going to happen. I mean, come on. Sure. You could talk about Snoozeville Mondays and possibly something happening Tuesdays, or you can try to extrapolate out and see what the reality is.
Sometimes you can just say what it is. It's got a little boring in foreign exchange. You can just say that sometimes.
Yeah, so what's going to make it change?
We can talk about that. What will make it change instead of what will keep it the same?
Well, yeah, but what he was saying is interesting, that basically, some sort of shocking figure in inflation could make that change. Interestingly, though, Jim Reed of Deutsche Bank just put out this chart showing that inflation data surprises are running at the strongest on record, that you're actually seeing when it comes to those particular data points, incredible upside surprises already.
I appreciated this chat just to make up for Tom's little private conversation about, was it Lordstown?
Lordstown, it was a SPAC. We looked for SPACs for David Wilson.
Hasn't the Ford...
We're SPAC deficient.
The Ford EV plans just killed that. Isn't that over now?
Yeah, I don't have a strong view on that. My major view is I think there have been some big figure FX trades that have worked. Just look at Euro Yen.
That was a nice segui, as you might say. Coming up in the next hour.
I might.
Julia Coronado.
Matt Hornback said segui.
Oh, dear
Macro
Lord.
Policy Perspectives President and founder will be joining us. Equities through 4,200 at 14 points on the S&P. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. More than 1.6 billion COVID vaccine doses have been administered globally. That's according to data collected by Bloomberg News and Johns Hopkins University. Dr. Anthony Fauci, the top infectious disease doctor in the U.S., has said that roughly 70 to 85% of a country's population would need to be vaccinated in order for a return to normalcy. German Finance Minister Olaf Scholz is backing a plan to require companies to report climate risks as he seeks to boost his environmental credentials in his bid to succeed Angela Merkel as Chancellor. Speaking today in a Bloomberg webinar on the German election, Scholz also weighed in on the week's hijack of Ryanair flight by Belarus.
Since piracy, you could understand that I'm really, really angry about what happened, and we cannot accept activities like this in Europe. This is against any agreement we had and have. And it is necessary that we are strict and that we continue to be strict.
In addition to corporate reporting, Scholz is pushing a proposal for a so-called climate club to seek an agreement with the US on the EU's plans for a CO2 border adjustment tax. And President Biden will meet privately at the White House today with the family of George Floyd 1 year after his murder. The meeting comes as negotiators in Congress are still working on legislation on how to hold law enforcement officers accountable for excessive use of force. Biden had hoped legislation bearing Floyd's name would be passed by the anniversary of his death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
That liquidity is likely going to be waning. The Fed will be likely tapering at some point within the 12-month window. The ECB, even though they promised to ramp up their purchases under the PEP program, that's been pretty underwhelming, to be honest. So I think a year from now, that's going to be coming down. And even though it feels like, and we can observe a lot of liquidity in the markets today, I think that pressure will actually be coming off within the investable horizon.
Good to catch up with Gene Tenuto there, the Columbia Threadneedle Global Head of Fixed Income from New York City this morning. Good morning, alongside Tom Keene, Lisa Bramvitz, I'm Jonathan Ferro. Tuesday morning price action up 15 on the S&P. We advance 1/3% on the NASDAQ 100, advancing 0.6%, positive 80 points there. In foreign exchange, south of 160, a break of 160 to the downside at 159.27, down about a basis point. That's supporting the story that you've seen play out in NASDAQ futures, though, as Tom and I and Lisa discussed a couple of hours ago. Is it correlation or causation? You want to talk about that, TK? Which one is it?
Not a
Yields
big fan
lower,
of the discussion.
NASDAQ doing nicely.
You bring a seminar on a Thursday afternoon to a complete stop talking about correlation.
Well, should we do that seminar this Tuesday morning?
Absolutely, let's do it. Let's bring everyone to absolute snooze. No?
I think
done? You want to move on?
It's
All right.
often too simplistic within market study.
Okay.
It's great for theory. It's great for if you have a piece of chalk in your hand, correlation and causation.
Well, I'm teeing you up, Tom, just to
I would say
that
causation.
maybe this is correlation and not causation. For Lisa to say, I would say causation, and for me to kind of moderate the thing to make it less boring, but carry on.
Okay, well, on Wall Street, there's a lot to carry on. It is active, to say the least. You had the Mike Mayo splash a few days ago, about 200,000 American banking jobs exiting. How about on a global basis? Our team in Frankfurt, led by Steve Ahrens, has a definitive summation of the saving era at Deutsche Bank. John, Mr. Saving, to me, he's been there like a cup of coffee, but yet we're talking about the saving era.
Well, the good news, Tom, is that every time there's been a crisis over in Europe, we haven't talked about Deutsche Bank as much, and that is true of Archegos as well. And I think that's got to have been the big shift, that we talk more about the likes of Credit Suisse than we do the likes of Deutsche Bank. So clearly, has something changed, Tom, or did they just get lucky? Which one is it?
Well, that's a really important comment. We're going to discuss that now. The luck of all this with Sri Natarajan, our Bloomberg Wall Street reporter. Sri, your focus is on Goldman Sachs, and they're really not a compare and contrast with Deutsche Bank. But nevertheless, luck is so much a part of this, as John Farrow mentions. Has Mr. Saving just been lucky to get into Deutsche Bank, managing it at the bottom?
Look, luck is certainly a part of it, but it tells you a lot that when we are talking about the Archegos situation, the shock here isn't that Deutsche Bank lost money, but they managed to dodge the bullet. There's a great line in the story that Deutsche Bank for long has been the perennial sick child of European finance. It has lost money in 5 of the last 6 years. Its shares are 87% below their peak. So the bar for success isn't all that high. It is pretty low, in fact. But even then, it is a sight of great relief for those senior managers in Frankfurt that everyone's talking about troubles at Credit Suisse, at HSBC, and elsewhere, whereas the Deutsche Bank stock in the last couple of years has jumped by nearly 70-80%.
Sri, can you talk about the distinction between a Deutsche Bank that a lot of people thought was just reducing risk dramatically and managed to avoid some of the pitfalls as a result, versus a Deutsche Bank that was using risk more intelligently, more deliberately, more targeted ways that they were actually going after big deals?
Well, you have to remember that under the new CEO who took over in 2018, and as Tom pointed out, very much at the bottom, the shares have nearly doubled since then, that there has been a massive overhaul. He's in the middle of this 4-year restructuring. The initial idea was to lean a little less on investment banking, to lean more into commercial banking. And the big worry when we think about the pandemic and the year of the coronavirus that has ravaged the global economy, everyone worried that a bank like DB would fall under the weight of bad loans. But instead, it is the investment bank and the outstanding success on that front, both on deal making and trading, that has helped it hold its footing, avoid the pitfalls like Archegos, and come out looking stronger than before.
You know, Sri, I want to get to the book value and then to the state of New York City right now. To me, the book value, and folks, this is all off the acclaimed Bloomberg Terminal BQ screen, which is really easy to use and is sort of apples to apples or more to it. Deutsche Bank cratering here, even with a comeback 0.46 book. The giant commercial bank of Paris, BNP Paribas, 0.67. And then leading the way, 2 times book, rounded up, JP Morgan in New York. Sri, we forget how flat on its back European banking is. With that, what is the state of play for Deutsche Bank in New York?
I really don't think we at this point of time can be thinking about New York dominance, about U.S. dominance. In fact, the real contrast that you point out, Tom, is the difference between European banks and the American banks. Since the great global financial crisis in the last decade, U.S. banks have really pulled ahead. They have become the real major global force. In John Prozan, like we discussed earlier, mentioned recently that some of the top 3 banks have created such a major competitive moat that you're no longer talking about the bulge bracket banks. You're talking about the super bulge bracket banks, names like Goldman Sachs, JP Morgan, Morgan Stanley. And when you have that discussion, the main European banks don't feature in the same league, which is why I say Deutsche Bank is not competing against the likes of JPM and Goldman Sachs. It is competing against itself. It is trying to make sure A, stays afloat, improves from a very low base, and then when people are talking about trouble spots in European finance, they want to make sure Deutsche Bank is no longer in that conversation.
Sri, just real quick here, another aspect here is the likelihood that Deutsche Bank will try to consolidate with another European bank as it shores up its balance sheet. Who is the likely contender?
Look, we've talked various scenarios over the last few years. We've talked about the need for creating a European champion. So whether it's one of the other major European banks you're talking about where they could combine with, or even possible combination with other German banks, it isn't clear how quickly they could move on something like that. At this point, I think it is really about shoring up their basic financials, making sure that they're in a strong footing, and any deal that they look to strike, they're doing it from a position of strength rather than desperation.
Sri, good to hear from you, sir. Sri Natarajan there, the Bloomberg Wall Street reporter. I didn't realize that the Time Warner Center, Tom, becomes the Deutsche Bank Center at 1 Columbus Circle. I didn't realize they get the naming rights too.
I didn't know that.
They do.
I'm learning is
Lisa, I imagine, knew that.
That's right at the Mendoza line there. It's 59th Street, and I don't go below 59th Street as a rule, John, but to be at 59th Street is even more challenging.
For a man that used to live on Central Park South, you never went south of 59. No, he just kind of walked parallel to the bottom end of the park. Is that
it's like magnetic force
he's
keeping him? Yeah, he's
lost
getting him.
Words on this. Did you ever make it over to the old Time Warner Center?
John, after we paid the whole rent, we went over to Time Warner and paid the whole paycheck.
Coming up, David Costin of Goldman Sachs, the chief U.S. equity strategist from New York City. Equity futures up about 1/3 alongside Tom Keene, Lisa Brambidge, Jonathan Ferro. Your equity market's doing a little bit better the last couple of days. A bounce for the NASDAQ on radio, on TV. This is Bloomberg Surveillance.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Is that not only the data comes in hotter, remains hotter, I think is kind of the important part of it. And the Fed is so far behind the curve that it's hard for them to catch up.
We've already had a bit of a melt up in the first half of the year, so we don't necessarily see another melt up happening.
Inflation could keep rising, it's already rising, but stay higher for longer.
Even if we get some decent CPI prints for the next several months, I don't think that's going to be enough to force the Fed's hand into tightening any time before 2024.
You cannot really push the story of average inflation targeting and then have a rate hike as soon as 2022.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us on radio and television this morning. Coming up, our equity discussion of the day. David Kostin will join us from Goldman Sachs. And part of that is the good news. The Kostin bull market call, John, is about the end of this pandemic. And Moderna steps in where Pfizer has been.
Here come the headlines, Tom. The COVID vaccine highly effective for adolescents in the Moderna study. 93% to 100% effective in a study of 12 to 17-year-olds. Tom, that's not going to surprise many people. From here, the process continues. The company will submit for regulatory authorization in early June. And then from there, Tom, you imagine this one gets rolled out.
It gets rolled out. And to me, Lisa Abramowitz, it's about the quiver of solutions. It's not anymore one target, one silver bullet. It's a quiver of solutions for nations that are ahead, like the United States and the United Kingdom, and too many nations behind.
Yeah, and also here, basically, Moderna would then follow Pfizer in terms of vaccinating those age 12 to 15. The question now is below that, what about younger adolescents? And are we almost out of the pandemic, Tom?
Stock moving 2.2%. John, just because of the importance of the moment, we need to really frame the equity markets. Futures up 15, Dow futures up 92, not on the cusp of 35,000, but John Farrow notes 18.36 on the VIX. That's a David Kostin number, isn't it, John?
NASDAQ 100 futures breaking out too, Tom. Up 75 on the NASDAQ 100 this morning, up 0.5% after a really tidy rally in yesterday's session. Growth has made a bit of a comeback. Now, is that just a little bit of a bounce that fades, Tom? What are the signposts that you look for to try and understand whether that move's a little bit more durable?
Oh, I'm going to go to sector rotation here with David in a moment. Lisa, I do want you to step in here now. With every Friday, the anti-Kostin comes up, and it is the pendulum of gloom. There's no other way to put it. There's a whole cast of characters saying Kostin is wrong.
That's called bond investors. No, I mean, in all honesty, there is a question, and to John's point, about the growth names. It's big tech, some of the names that did the best during the pandemic, having a resurgence. It's coming in tandem with a flight to quality, even within credit. You've seen this sort of rotation into higher grade bonds from the lower grade bonds recently, and you've seen those extra yields fall to post-crisis lows. And again, this comes at a time when people are concerned about inflation, which raises a question of why they are expressing that concern in a flight to safety, Tom.
One question on the other news stories. There's a million news stories this morning, folks. It's actually quite a busy morning. John Farrow, when I look at Belarus and the flight, you're our expert on Ryanair. and on British aviation. Have you been surprised at the response from UK?
Are you calling me the expert because I'm the only one of the three of us that's been on a Ryanair
No, it's because Guy's
flight?
on at 10 o'clock and you're the only one that has a clue.
EU's on the same page when it comes to dealing with this, and I imagine the UK will be as well. Where there is some difference around travel right now, Tom, is how to reopen things for the summer and who is going to curtail access of UK tourists into Europe, because Germany and Austria have made that move in the last couple of days, and Spain's saying the door is open. France is considering closing the door. That's where there's some confusion right now, Tom.
Okay, what we're going to do right now is bring in David Costa, and he is Chief U.S. Equity Strategist for Goldman Sachs. We've got a whole bunch of questions as he resets for S&P 5000. But David Costin, we must celebrate, as you do at Goldman Sachs, with a fully staffed Team Costin today in the office. I want you to explain the path to get your team ensconced at Goldman Sachs again.
Well, I want to definitely congratulate all of our whole team. The entire team is here for the first time in 15 months. So we're pretty happy about that. And the process has been halting. We had some density restrictions in terms of the seating arrangements, but given the way we've been able to use some extra offices, we're all here today. So I'm happy about that.
What changes, David, for you as the team gets back around the table together again? What's the big difference?
Well, the difference is just the interaction and being able to have small conversations about different issues that come up on a computer screen, call someone over to point it out. Some people wear masks still, but generally speaking, everyone absolutely has been vaccinated, twice vaccinated, things like that. It's just a much more efficient way to communicate. Of course, we were doing that before with people remotely, but just an incremental amount of communication. So I think that's really helpful on our team. So we're really happy about that. And I think in my conversations with clients, more and more of them seem to be coming back to working from their offices. And there's different portfolio managers have different time frames to kind of re-engage. But right here today, my team, U.S. Portfolio Strategy, we're all here.
Well, let's shine a light on one of the debates at the moment that I imagine you and the team are having right now. The Nasdaq's made a bit of a bounce, David, and earlier in the conversation on this program, we were talking about whether there is a correlation or a causation between what happens with rates and what...
A lot of different dynamics, and I would unpack that in sort of two ways. How does inflation affect the equity market, broadly speaking, and then which sectors in particular? And so we think about it, the transmission mechanism on the one hand is on valuation, because the impact of higher inflation leads to generally higher rates, and that has an impact particularly on some of the longer duration, longer expected growth stocks. But there's also a transmission mechanism through margins. And so I think we need to bring both of those together and think about it. What is one of the attributes of the technology sector is they have extraordinarily high margins, and they've been relatively immune, pun intended there, relatively immune from the higher inflation curtailing their margins. So on the one hand, you have a suppressing or a depressing effect on valuation for inflation and what that means for rates and the valuation of that long-term expected growth. And on the other hand, you have the durability of their margins as compared with some other more cyclical sectors where their margins may not be so robust in terms of ability to pass through those higher input costs. So I think those are the two things that we are trading off one against the other. And I think my view is that the margins are going to become the more dominant topic of conversation. The idea of transitory is a debate we will be having consistently until October, right? We'll put a stake in the ground and say that's for 6 months. And so the Fed has indicated its view. My colleagues at Goldman Sachs economics team also have a view that the inflationary impulses are relatively transitory, and then we'll recede back towards the sort of 2% core PCE next year. So that's sort of the issue. We're going to have that repeatedly. I think the more interesting analytical debate with portfolio managers is around the durability of margins. And margins, Jonathan and Tom and Lisa, have recovered now to their pre-pandemic levels. So they're already back to where they were February of 2020. And so the question is, from here, where are we going? And my view is margins are going to be relatively flat, and a big variable there is the tax rate, the corporate taxes. If you told me for a moment we will not have corporate tax reform, then we'd have earnings growth of around 10% from this year into 2022. Now, that's not our view. We expect there's going to be an increase in corporate taxes, and that is going to mean that growth in earnings is going to be around 5%. And so you pay a different multiple for a 5% growth as opposed to 10% growth.
David, this has been the story that big tech can pass on pricing increases. Big tech reigns supreme again and again and again, and that is why it is the top holding for so many companies, for so many investors. At what point do you start to worry about concentration risk yet again as hedge funds double down on, say, Facebook positions after already having large positions outstanding?
Well, it is interesting you mentioned Facebook, as it is the largest stock in our hedge fund, very important position. It's a basket we have on Bloomberg, been tracking this now for 20 years. Every 90 days, we're looking at around $2.8 trillion of long and short exposure, and that's the most most important position. It supplanted Amazon that previously had that position. We just published that last week. And so, yes, it's a big topic of conversation, just how sort of dominant these can be. Now, right now, Lisa, these 5 stocks, the big 5 companies that we all know, are comprising around 21% or so of the S&P 500 equity cap. But last September, that was 25%. So the actual concentration has diminished slightly, and perhaps more importantly is in the growth index. If you look at, say, the Russell 1000 growth index, this was a big issue for diversified growth mutual funds, where the passive index weight in the Russell 1000 of the 5 largest companies put a number of funds in excess, or tripping, if you will, the diversification requirements of the SEC. That has come down a little bit as these companies, as big and dominant as they are, relative to the rest of the market, they've receded a little bit in terms of their concentration. So the question we think about, and the discussions with fund managers, Lisa, is, well, just how further can they run? If you think about what happened year over year in revenue growth in the first quarter, they were up 41%. Up 41% compared to the rest of the market, where they were up modestly in terms of sales growth. And so the idea even think of the worst part of the pandemic in the second quarter last year, the worst part of the pandemic, year over year, these companies had 18% revenue growth. Rest of the market was down around 7%. And so we're looking forward and ask ourselves, well, these companies are pretty durable in terms of their growth. They're expected in terms of revenue growth 3 times faster than the rest of the market in terms of top line sales. They trade at basically about 5 multiple points higher multiple than the market. Market's like 21 times right now. These are sort of 25, 26 times. So they're trading at a premium valuation, no question about that. But they're also offering better growth.
David, in the time we've got left, I've got 8 ways to go here, and I do want to congratulate your team on their Amazon research of a couple weeks ago. I thought it was great how you went to cash flow. There's a lot of people out there cautious short-term or a constant long-term view, and one of them is Douglas Cass. Doug Cass is cautious right now, and Doug Cass is saying, I don't care what Constant thinks about the bull market. There's no volume out there. How does volume play into your view of the equity markets?
Well, when I think about it in terms of liquidity, in terms of low versus high liquidity stocks and groups of companies that have more or less liquidity from a trading perspective, and the market's actually rewarded companies that have relatively lower liquidity, and that's just a factual statement in terms of the performance. Doug, I know Doug, I haven't talked to him in a while, but he's generally more on the bear side than the short side, so wouldn't be surprised to have a more cautious take on the world. To be fair, the market right now in S&P is 4,200. Our target for the end of the year is around 4,300, so pretty modest upside, to be very clear, and that is likely to be shifting from more cyclicals, which has done really, really well so far, towards more of the growth. And the idea behind this intuition, Tom, is the economy is peaking this quarter in terms of growth rate, like 10%. And that's going to decelerate, still grow, but at a slowing pace. And that's where the transition and handoff to some of the companies that are positioned to grow at a more extended level. And the intuition behind that is the companies that are investing in their business. And that is what makes some companies differentiated from others. The typical company invests 11% of its cash flow from operations to grow its business. And there's a portfolio of companies where they're 75%. And so it's big companies that we talked about earlier, around 65%. So it's an enormous amount of investment to grow into 2022. And make no mistake about it, all of the conversations with fund managers are about the growth prospects in 2022.
Hey, David, love catching up with you. Fired up because the team is back in the building. And David, we're excited to have you in the building with us soon around this table at one point in the future, maybe in the next 12 months or so.
I can lean over. Oh, Lisa, could you pass me the Tang, please?
Lisa can't wait.
Please, could
From
you
New York
pass me the
City.
Tang?
Throw it at the glass
This
wall.
is Bloomberg Surveillance.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public